Tesla finally made a move that many investors have been asking for. Starting now, Tesla is offering a loan rate of less than 1% per year for all new Model Y finance orders in the US. This promotional rate applies for terms from 36 to 72 months for new vehicles, and orders must be placed before the end of this month. For example, before, for the long-range Model Y rear-wheel drive, you would pay $706 per month, but now you will only pay $600. So everything got $100 cheaper, and these numbers are before the $7,500 EV tax credit. And the interest rate seems to be fixed. If you apply the EV tax credit for the long-range Model Y, you will pay just $539, but the craziest part is the Model 3 long-range is gonna cost you $750 per month now. The Model 3 also doesn't get the new promotional financing rate. But getting a Model Y for $500 a month, that's a crazy good deal. And if you agree, click the like button right now. The Model 3 not getting the tax credit is the thing that has the most negative impact on Q2 delivery, says Troy. The problem is expected to continue until mid-2025. Keep in mind though, if you lease a Model 3, you can still get the full $7,500 tax credit. The problem is, no one wants to lease Tesla vehicles. People want to buy them. Troy predicts that the deliveries are going to be much lower than the 466,000 units delivered in the last year's Q2, and it's all because of the tax credit issue. And Troy is guessing it's going to be closer to 400,000 deliveries. But with the Model Y now being so much more affordable compared to the Model 3, why would you want to buy a Model 3? I mean, the Model Y overall is a better car for the vast majority of people. James seems to actually be excited about this change. On the other hand, Gary Black says, I've been saying Tesla should buy down auto loan rates for at least a year instead of lowering prices. So now Tesla offers lower prices plus discounted loan rates. But do we know 100% that Tesla is buying down these interest rates? We don't have an official confirmation, but I think it's safe to assume that it is happening. Lower interest rates are especially preferred by people that already own Teslas, because then technically their Tesla vehicle is not worth less money. But if you just do a big price cut, yeah, your car immediately loses value. This could also work out for Tesla really well if interest rates start to go down overall. For example, in the US, it is expected that the interest rates a year from now roughly are going to go down by 1 full percent. It's not a guarantee, of course, but take a look at this and tell me what you see. What I see is interest rates basically never stay at the same rate unless they are already really low, like from 2009 and until 2015, and then from 2020 to 2022. Generally, you look at any other time and there's always movement, and it's in one direction. It's either up or it's down. For example, here, up, 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 and then down, 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 until it starts going up, 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 and then down. There's always movement. It just doesn't stay in one place. And the rates have been flat now for a little bit of time, so normally you'd expect the rates to start going down. Another observation is, and this is not always the case, but you can sort of see that the rates come down sooner than they come up. It takes some time for the rates to come up, but going down is often fast. Sometimes the reason is because of the economy and the crisis, so it doesn't always mean that it's a great thing for the interest rates to come down, because it could imply that we are going through some tough economic times. But generally, it's a great thing for growth stocks like Tesla stock. Now, here are a few reasons why cutting the interest rate can be considered a better approach than just cutting the price. Number one, specifically in this case, it's a time-based incentive that has an expiration date, which creates urgency in the consumer psyche and will drive more sales, at least temporarily. Number two, it won't further precipitate the downward spiral of price cuts, leading to expectations of more price cuts, leading to even more price cuts, and then expectation of more price cuts, which lead to more price cuts. Number three, it won't negatively impact residual values, which won't negatively impact used Tesla prices, which won't further encourage consumers to simply buy a used Tesla and instead purchase new. It also won't reduce the value of Tesla-owned certified pre-owned vehicles, which will help Tesla's used car sales. Number four, it won't negatively impact brand equity. Price cuts reduce the perceived perceived value of the product. It won't reduce the value of Model Y fleet vehicles and repeat or perpetuate the disaster of what happened to Hertz, fleet sales support volumes, and pricing. Now, I think lower interest rates when purchasing a vehicle still will impact used car prices, just not as much as outright price cuts. And James finishes with, Tesla should have done this a year ago, quite frankly, especially given Elon's false but consistent position on interest rates. And now, if people actually found out about this promotion, it would be really great. Elon has not reposted that promotion yet, but he reposted this post. I took my first road trip in my Tesla using the latest FSD version. My car drove me 366 miles with 0 disengagements. I can confidently say FSD is the best technology I've ever experienced. James points out that the IRA moving from post-purchase to point of sale in January of this year was also a reduction in monthly payments, but didn't really move the needle in Q1. The move to offer a special financing rate on Model Y is a good one, but if awareness is low, the incremental volume they will gain from the investment will be small. This will be a good test. So if lowering interest rates for the buyers is such a good move, how come Tesla did not make this move before? It probably had to do with dropping used vehicle prices, exposing Tesla to resale financial risks as leased vehicles return. But now it appears used vehicle prices are near bottom or have bottomed already, making leasing much less risky down the road. And then additionally, the new financing offer applies to terms of at least 36 months in length, which means that the ultimate financial risk is nearly 3 years away, and by that time, the interest rates will be lower, at least based on what's likely to happen. And by the time these vehicles return from their release, Tesla launched and ramped at least 2 new classes of higher volume vehicles, and Tesla's AI products are likely making a significant impact on Tesla's financials, de-risking any leasing risk relatively to Tesla's business size. So it turns out that some of the people that stormed the Giga Berlin factory, many of them have been camping out near the factory for months. Reuters called them environmentalists, but no, these people are definitely not actual environmentalists. Guess who pays them? Certainly not themselves. These campaigners have been camped out in the woods since February. And Elon asks, I wonder who their puppet masters are. That's a reply to Omar. The far-left activist group known as Volcano Group claimed responsibility for all of what's happening.